Hey everyone, welcome back to KTalk. I'm Kay, and it's Friday, May 30th, 2025. Let's dive into yesterday's action in the US stock and the current action of Bitcoin. Yesterday, the US stock market continued its consolidation chain. The way this consolidation will be eventually resolved are quite intriguing. Given that rebound has reached its current point, if it were aiming for a new high or even greater heights, what would be its underlying logic? Is that the economic growth driven by the surge of productivity from the widespread adoption of AI? But currently, it seems more like capital expenditure by high-tech companies. This driven the booming graphic card industry. The entire chain from AI to actual user and service information hasn't fully go out. I think it's move on. So is there possible that the new high may lack of a solid foundation? Of course, or could its rebound or even a new high be a bull trap? This is the question. So let's look at yesterday's movement and start with the Nasdaq. On the 4-hour chart, yesterday saw a attempt to push higher. You can see, but it's pulled back down by the overhead resistance. This means that it tried to break out of the 4-hour consolidation but failed. So it remains a 4-hour consolidation chain. We can see this is also a 4-hour consolidation. Try to break out but pulled back by the resistance. Pressure on the upper, I think. Let's look at the 30-minute. The 30-minute chart is even clearer yesterday. The Nasdaq opened directly at the upper edge of the 30-minute channel, but it's opened at its highest point when pulled back into the last 30-minute consolidation. Once 30-minute, the second one is a down chain, and the third one is a up chain, and it try to break out, but pull back and back into the 30-minute consolidation. This is 30 minutes chain, also a 30-minute consolidation chain. It also closed in the trend line, at the trend line here, meaning it attempted to break out of the entire 4-hour consolidation yesterday but is unsuccessful. The conclusion is there is no breakout, it will continue its 30-minute or even 4-hour consolidation. So once the consolidation level expands, the consolidation period will also be longer. So let's look at the S&P. The S&P also opened higher but closed lower. It opened wasn't even at the highest point of this rebound. Therefore, the S&P doesn't have the momentum to break out. So he is not at the highest of this rebound. So it shows lack of momentum. So S&P will definitely continue to oscillate within the 4-hour consolidation. Finally, let's check the Dow Jones Industrial Average. You can see that the 30-minute Dow is even weaker. It might be related to the area its 4-hour chart is on. On the 30-minute chart, the Dow doesn't gap up. Instead, it fell first and then rebounded, but its gains was also the smallest among of the 3 major indexes. Looking at the 4-hour chart, 4-hour chart is so why the Dow is so weak. You can see that the pressure line above the 4-hour consolidations is preventing the Dows from breaking into a bull market zone. So the Dow remains a bear market zone, remains in a bear market zone, and if it fails, it could potentially from a large level consolidation. So if it fell, it maybe form a large level consolidation, maybe days, maybe weeks. So therefore the Dow require caution. Now that we have covered the US stock market, let's look at Bitcoin. Looking at 4-hour charts first. There's a sense of Bitcoin's survival hanging in the balance. You can see that Bitcoin has reached the lower edge of its 4-hour channel. The 4-hour channel's edge is here. Although the current forming a doji candlestick, indicating that it hasn't broken below the lower edge to form a downward channel yet. However, as I said yesterday, Bitcoin was not safe yesterday, even though its rebound after touching the 4-hour lower edge. The rebound did not enter a safe zone. It's still hovering in the middle in the chosen stage of the 4-hour chart. This is the chosen stage. It can choose to break down or just rebound and break out upon, but now it's a very dangerous signature. Okay. Then look at the 30-minute chart. Looking at the 30-minute chart, you can see the 2 downward consolidations. This is the first. This is the 4-hour consolidation. It's very clear, and one is up, down, and now it's just broken. Break out of the last 30-minute consolidation and then go down and touch the former 4-hour consolidation's upper edge. So it's just at this place Bitcoin has rebound. So at this 30 minutes perspective, Bitcoin is actually very dangerous, and it is about to form a third downward period of consolidation. If this forms, the effectively break below this consolidation of 4-hour, then Bitcoin's peak might have been the 112K here. So my view is that if Bitcoin cannot rebound strongly at this position, it can rebound very strong, and at this position I think I would conclude that Bitcoin's bull market is likely coming to an end. If that is that's the case, we should not longer looking to long the Bitcoin, but rather to look bearish and go short. So it's crucial to be extremely careful with Bitcoin's movement. The characteristic of the breakdown would be Bitcoin's breaking below the lower edge of the 4-hour channel. So let's look at the 4-hour channel. Here it may be to break down below the edge, so take care. And if that happens, the decline should be very, very swift and sharp, so take care. If that happens, I think we should short Bitcoin. Yeah, it's a very dangerous time, and we have to monitoring the Bitcoin. Okay, all right, that's my brief market review of US stock market and Bitcoin for today. If you enjoyed today's analysis, please like, subscribe, and hit the little bell icon to keep up with the market pulse every day with KTalk. Feel free to share your thoughts in the comment section below. We will see you in the next episode. Thank you.